Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable portfolio in about 2 years and now manage that portfolio. Today, guys, I want to talk through investing for cash flow or appreciation. So this comes up from time to time. You see folks saying, hey man, I can buy this $50,000 to $100,000 home. It's way out in the boonies, or it's not very desirable area, where the houses are cheap, but the return is crazy high. I might get a 25, 35, 55% return on my money because you're coming up with such a small down payment. So I was having this debate with a couple friends of mine, and we decided, hey, I'm gonna actually dive into my portfolio. This isn't representative of the entire country, but I wanna dive into my portfolio and see which one has returned better. So I pulled up my properties I've invested in Katy, and then properties I invested in Texas City. So if you're local, Katy is a suburb of Houston, very desirable area, great school district. Probably the average purchase price now is somewhere that 250 to 325 range, maybe in the upper end of that. So I looked at Katy, nicer suburb, desirable area, and then Texas City. It's about 45 minutes, half hour, 45 minutes south of town. Property values are probably 150 to 200, maybe closer to that 150 mark. You'll see when I talk about some of the purchase prices on what I paid for those, and then we'll go through some of those figures. So a suburb, desirable, that's more for appreciation, low cash flow. If you were buying in these markets, this would be an appreciation play. And then you have Texas City. This would be a cash flow play. You're not really going to see much appreciation in this area. And we're going to see which ones perform. So I've done my analysis here on my spreadsheet, but I wanted to walk through. I didn't want to spoil it. Typically I have this stuff written out, but I didn't want to spoil it because I think you guys will be surprised by these figures. So, and I average these because I actually have more properties in Katy than Texas City. There's 9 properties between Katy and Texas City. And I have more, so I wanted to do averages. So this wasn't screwing anything up. So before I get into that, that's what I'm going to break down today. If you guys are thinking about should I invest for cash flow appreciation, that's what I'm going to break down my own personal portfolio. Before I get into that, if you guys would like, subscribe if you find this valuable. If not, pass on, give us some feedback and help make this better. So thank you. So let's start. In Katy, the percent rent growth that we've had. Now, I didn't do, because I bought these over the past 7-ish years. So I didn't do like a year over year, like a 5% year over year growth. I just did a total growth. So some of these I bought in 17, some 19. Usually it was over that year span, but I still wanted to show the overall return. So some of you might say, well, that's kind of, you're kind of doing a disservice to these or that property. This is just an average, guys. I could pick apart this analysis, but I think this will be representative and tell the story that I think when you're looking to buy property, this is what you should look at. So Katy, percent rents. So I had averaged across my portfolio a 23.9% growth in Katy. So pretty damn good. If you divide that amongst the years, you can do some math there to see. But really, what's compared to Texas City? 15.2. This really isn't that surprising. Percent rent growth. When you have a 5% growth on something that's $2,000 a month versus 5% rent growth on something that's $1,000 a month, you obviously have a higher growth on the higher value properties. So when we're talking about rents rising in Texas, 7 to 10%, it's obviously affecting the higher priced properties more, or the dollar value goes up more. Now, percent value, so this is the actual value of the time of purchase to the value of what it is currently. So same thing I did with the rents. What was the rent when I bought it? What is the rent today? So the percent value increase in Katy and then in Texas City. Now, this kind of surprised me, y'all. So we had a 68.8% in Katy percent value growth and a 72.4% value growth in Texas City. So they're not actually that far apart. So you might be saying, well, Cameron, this isn't that far. What are you talking about? I should buy these all day long. Well, we're about to get into the brass tacks here of this and why I think that you'll see why Katy comes out ahead. Or so I think, in my opinion. But yeah, these, I was not expecting it to be this high. I thought this would definitely be a little bit lower. As well as, I thought the percent rent growth would be a little bit lower than that. Not as close to Katy, but that doesn't surprise me that Katy's a little bit higher on the rent growth. I thought it would be a lot more, but here we are. So let's talk about the actual dollar value. Again, I think a lot of investors, especially first time, they look at a $50,000, $100,000 house and they go, oh my gosh, I can buy a $35,000 house and make 100% return on my money. Well, yeah, but that's $2 a month or $17 a month. That's one AC or one foundation issue or one set of windows, and your cash flow is gone for the next 10 years. So that's why I like to talk in percentages, but also in the dollar value. So the dollar increase in rents over those years, the average dollar increase in rents. So for Katy, and for Texas City. So Katy, the average rent growth over that time per month was $300. And again, this is about a 6-year period. So most of these properties are bought in 17, some 18, some 19. But the average rent growth per property in Katy over that time, from the time I bought the property to today in 2023, is $300 a month. The actual dollar growth in Texas City is only $183 a month. So percent-wise, my gosh, it's fairly close. But dollar value, this is like 40-ish%, or maybe even more than that. Let me do my math here. Half. It's over 50%, right? Growth in that, or higher than that. So this is the actual dollars you're going to be putting in your pocket. This is great. These are all great to do some analysis with, but these are the real dollars you're putting in your pocket. So over 50% of what you're getting over here in true value. This is still pretty good. Again, I thought this was still pretty decent. Let's see what the value is though. So the average growth in Katy, and then the average growth per property in Texas City. Again, so this is the average value increase from the time I bought the property in 17, 18, 19 to what it is today per property in Katy and in Texas City. So Katy was $105,000. Texas City was $75,000. So again, still pretty decent. I mean, these properties have returned pretty well. There was one that was actually pretty substantial, was over $100,000. The others were 50 or 60. But in Katy, definitely had several over 100,000 and a couple in that little lower range. But you guys can see this is a $30,000 difference. So percentages look the same, and rent percentages are slightly different, but you can see how much more this impacts in value at the end of the day. So if I would have bought in Katy versus what I would have bought in Texas City over the past 7 years, on average, this is just across my portfolio, I'd come out $30,000 ahead in value creation, or in actual value, like equity growth, appreciation, $30,000 in value more in Katy than if I would have invested in Texas City. And in the rents would have averaged gone up $300 per house versus $183. So, what does this tell you guys? I mean, to me, I want to buy in the Katys of the world. This doesn't, $30,000. Yeah, you might have only put the down $10,000, $15,000, $20,000 on these houses, and you had to put down a little bit more on these ones. But over time, this is only going to get bigger. That spread is only going to get more and more. So it's a little bit harder to cash flow over here initially. A lot of my houses in Katy barely cash flowed to begin with. Now they cash flow $300, $400, $500, $600, $700 a month. Whereas Texas City, I still have some properties that cash flow 100, 150, 200, $250 a month. Now that's net, not this, gross cash flow nonsense that some people perpetrate. And I've got a video up here on that difference between cash flow, gross cash flow, and pure cash flow. I hope that was helpful, y'all. If you guys are thinking about, should I buy in cash flow markets or appreciation markets, this is why I like, and even Katy is not like super appreciation. Obviously, there are some even better markets downtown, like closer to downtown Houston, that your average purchase price might be 500, 600, 700 grand. That would be like a pure appreciation play. This is still the suburbs, so you're still kind of playing both sides on the cash flow and appreciation. But I think a lot of folks find it difficult to cash flow in Katy initially out of the gate. But like I said, over time, if you're going to get 30 grand more per property over the next 5 years, and you have 5 of those, that's an extra 150 grand you're making up here. I just, out of curiosity, I didn't put this on here, so shame on me, but my average purchase price in Katy was $100,000, and my average purchase price in Texas City was $52,000. So purchase price in Katy, 100, almost twice that. So almost twice. I'd be interested to see what y'all's thoughts are. I appreciate you tuning in. I hope this helps you when deciding where to invest your money. Thanks.